I got the new one in my boots.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping. Just saying, I'm different. Ain't hanging on to the...
Well, thank you very much. This is MrNotAdvice. I am super excited that my co-host, Mr. Greg Reyes, is joining me today, and we're going to talk about EOS. We're going to talk about PCT, some ENVX. I want to get an update on what happened with the Cahodes case, if you can, and then beyond. But before we get started, let me remind everyone this podcast is for entertainment purposes only. This is not an offer to buy or sell anything. This is not a recommendation to make any investment or trade. And listening to this, you agree to hold harmless myself and my co-host, Mr. Greg Reyes. Mr. Reyes, how are you today, sir?
Oh, I'm doing terrific coming out of Mother's Day. I think I got a gold star, so life is good.
Awesome. That's fantastic to hear. Let's just dive into it here. We've got the market up. Nasdaq's up 658. The ES is up 150. And so, the stocks we were going to talk about today, post earnings, and let's start off with EOSE, their recent earnings, and then I'll make a couple comments about the stock price. I think what's going on here. So, what were your takeaways from EOSE's earnings call, and then a couple of subsequent data points that came out of it, sir?
Yeah, sure. I mean, look, I think that the earnings call was terrific on so many levels, right? It wasn't just that they put up, 10.5 million in revenue. It really, in my opinion, is that they appear to be at the inflection point in terms of a significant revenue ramp. Their commercial pipeline grew. They, added 1.2 billion in pipeline quarter over quarter, which I think was eye-popping. They've got backlog of 680 million. They signed two very significant MOUs with the UK, Puerto Rico, two microgrids. They also talked about a third MOU with a energy provider to data centers that is, north of 750 megawatt hours, which, is close to, call it, 100 million in revenue. They reiterated their guidance. And I think that really just kind of sets the table, in my personal opinion, about what's in front of him. The CEO talked about the projections out there for energy growth to double by 2050, and that the long duration storage TAM is growing at 25% compounded annually. I mean, that's an incredible CAGR. So you look at this thing and you then think about, where are they in the industry? Well, yeah, it looks like there's some progress that have been made on the Chinese tariffs, but in my opinion, you'd almost need to be nuts to make a long-term strategic investment in Chinese manufactured batteries, because there's nothing to say that there won't be an issue that surfaces in the coming weeks or months that could, put the Chinese battery offering at risk. So, you got a company with 100% U.S. manufacturing, 91% domestic content. The CEO talked about their goal of increasing that. And then you look at the product, and without the tailwinds that they've got from a macroeconomic standpoint and from a regulatory standpoint, that they just have a better product, that they can deliver multiple cycles intraday. Lithium ion can only do one charge-discharge cycle. They have no thermal runaway, so they're not going to create, a massive fire like we saw in Moss Landing that burns for months that can't be put out. They've got a 20-year life as compared to lithium ion, which is proving in the field to have only a 6-year life in actual use. And they don't have the issues of cost associated with cooling and heating that lithium ion does. They operate at much more extreme temperature ranges. So the they use a term called levelized cost of storage, which says that they have a 30% advantage over lithium ion. So I think that's just an incredibly powerful backdrop. And then there was some discussion about scaling, and they indicated that they could pick up, another 13% reduction in COGS as they scale and they're able to reduce their labor content, get better direct material pricing, and reduce their overhead. So, I look at this as just a very, very, very powerful and dynamic set of attributes that EOS is almost perfectly positioned to capitalize on. Now,
Mhm.
the fact that Cerberus delayed their last milestone, so they said that they hit 15 out of 16,
Mhm.
and it had to do with cash receipts associated, I believe, with customer shipments or
Mhm.
deposits. So the maximum dilution risk is 34%. It If they had hit all 16 of them, I think that they would be diluting the stock by 30 to 31%. So there was a little bit of gnashing of teeth when they recently filed their shelf of, I think it was 155 or 158 million shares,
Mhm.
of which Cerberus will get approximately 60 million shares.
Mhm.
And then they've got a shelf. It's not an ATM, so they're positioned if they need to raise capital. I don't think that they do with the Cerberus revolver and with the balance of the DOE loan. So this is just. I mean, look, like we've talked about in the past. I have a success filter that I use for my own personal investing. This company checks all of the boxes and is probably one of the most exciting setups that I've seen in the last decade.
I agree wholeheartedly, and I think the S3 filing, you and I talked briefly about it, that, over 25 years that I was actually, doing investment banking, every single time a company, we as underwriters, we would watch this reaction from shareholders, right? Oh my gosh, they're filing. They must want to sell. No, no, but they do have to they meet the legal requirement, right, and register their shares and file, and in case they do. But investors look at it like a negative, like, my gosh, they're just going to jam the price down and get out of it. And sometimes that can be true, but not with Cerberus. They've already had the opportunity to do that, meaning they could have increased their uh, share count. They could have increased their interest rates. They didn't. So it's sort of, yes, I think there's that overhang, but I think I was on Twitter and I said, what is the existing bear case now? What's the bear case for EOSC other than that they operationally stumble? But it's no longer a going concern, as you and I, talked about it over a year ago. It's a different capitalized company. It is. I still believe, Greg, that this could be one. We're not there yet. I mean, we haven't gotten to the hockey stick part, the inflection part of hyper growth. I think we're going to enter that. I actually think, we could see weakness here if we don't get another news release. We could see weakness in the stock for the next 3 months, just because without any announcements or any catalyst, what's the rush until, I think, once we see more clarity on how they'll achieve their earnings or their revenues for this year, right? Because it's a significant amount jump that they're going to have to meet it with, but I'm assuming they're going to want their Puerto Rico deal closed. Also, Greg, one comment I just want to make is, the fact that the Puerto Rico deal was closed, Cerberus was lining up that financing. They got financing done in this market. That's pretty amazing. Yes, it's a sovereign municipality, or it's a municipality type of investment, but still, I was very pleased to hear that. To me, that closed, or that proved out their entire business model, from a product launch standpoint to the financing standpoint. Now they just have to get it to the delivery. But I still think EOSC has a chance of being a unicorn. I really do. I stand by my price target for the end of the year at $15. And with this, I will say, looking at today, currently the stock is up 6 pennies, and the overall market is up almost 3%. You know, EOSE over the last couple of days has not been acting strong, but I want to make a point on that day on May 7th. The volume jump was almost 7 standard deviations. That is a massive jump. I think you have a better chance of getting hit by an asteroid. So
No, it
yeah,
was stunning. It was like
yeah,
25 million shares.
yes.
And, some people were saying, oh, it's all short covering. I don't think it was all
Oh,
short
no, no, no,
covering. And
no. We had a quarter
obviously
of a
there's,
million. I'm sorry, we had a quarter of a million of call contracts go off in 26, 27 leaps. No, no, no. This was institutional buying, and my point is that volume, that huge volume spike, all those participants are going to do everything they can to prevent that from coming back down to that 533 break level. And so I've got support right now in that 593.6 level. As long as we can stay above that. Yeah, I don't like that. It's in my today it's acting weak, but that's a huge move that in one day. So we may get a little bit of drift here. I don't know, but I'm looking actually to add back. I sold part of my position on that spike, was able to capture on this one thing tranche of options 50% in 2 weeks. So I'm looking to get back add back because I'm at 10% of my total right now. I think 12%. I want to be higher than 16, maybe to 20% on this thing at at the right time. But I agree with you, Greg. Um, it is. I don't. Maybe you. What would be a valid bear case, no matter how low probability? I mean, what would be a bear data point, Greg?
well, I think that the only viable bear data points fall into the following headlines. One is in June when Cerberus's warrants get filed, they puke them all out. I just don't see that. I mean, obviously, I don't know, but this stock could be a 10 bagger even from these levels. So maybe they take none off, maybe they take some off, maybe they take enough off to cover the loan risks that they have, but I just don't see them selling their entire position, and I certainly don't see them doing it irresponsibly. Then of course there's the order concern.
Mhm.
They've got a lot of irons in the fire, and we heard about some MOUs, but we all know that MOUs aren't hard
Right.
bookable orders. We need to see those convert, and I've got some thoughts on that I'd like to talk about next. And then the last is execution risk, and quite frankly, that's the least of my concerns. I think that what the CEO has proven is, he's a scrappy. Joe Mastrangelo is a scrappy barroom brawler, and
Mhm.
he is immersed in the details of this company at a level that I find incredibly impressive.
Mhm.
So just to spend a couple minutes on the whole issue of orders and revenue,
Mhm.
I this is just kind of my thing based on my history and experience, but I pay very, very, very close attention to not only the words that are spoken on the call, but also the words in the press releases, because these are highly curated words with legal review, and I think you can read into what is said and written. But if I think about what Nathan Cucker said, he said the following. He said, we're seeing very strong tailwinds, which certainly makes sense. He said that they have a number of customers that are revisiting their plans and decisions that they had made in the past, assuming they would use lithium ion batteries. I view that as being incredibly positive. Now, it takes some time to do that. It doesn't just happen with the flip of a switch, but the indication is that a number of customers are going back and they're rerunning the numbers, and they're going to be moving in the direction of an EOS offering for all the product benefits that I mentioned, not the least of which is the wild card as it relates to Chinese batteries. And he talked about how, and this is the quote, there's incremental interest in a US based solution and US content, and that it is a key competitive advantage. So I think that is very telling. And the one thing that I was very positively surprised to hear is that the 750 megawatt hour MOU with a data center energy provider has huge implications in terms of an incremental TAM, an incremental opportunity without all of the regulatory red tape
Mhm.
associated with connecting a battery to the power grid.
Mhm.
But if you think about it, the way most people used to think about batteries as it relates to data centers are, oh, gee, it's just battery backup. But what they said is very, very different, and it basically dispels that legacy thinking. But what he said was that as it relates to data centers in their offering as compared to lithium ion, that they do get that 30% advantage in terms of levelized cost of storage, that by having an 8-hour discharge, they can drop in a battery that sits on the back end of the data center that charges during non-peak periods and discharges, that basically allows the customer to mitigate their load, and that they can reduce energy costs, which are one of the highest costs for data centers, by up to 50%. Just think about that. That this is a product that literally could have uh, less than a 12-month ROI. That because of the benefits of discharging an EOS battery in the back end of a data center, that it gives them 3.5% free incremental energy that they can apply towards computing, and that the low system degradation that they have. And what that means is being able to do multiple charge discharge cycles within a 24-hour period can reduce the OPEX cost by 50%. These are eye-popping numbers. Now, we need to see this MOU convert into an order, but there is a mega trend in the United States around AI data centers and hyperscaling. We know that AI data centers take as much as 10% more energy than a traditional cloud-based data center. And their technology seems to be sitting right in that sweet spot. So if we have an Amazon or a Google or a Facebook or Masayoshi-san from SoftBank with this massive AI data center that he's building in Texas, this stock could absolutely be a monster. Is it ready
I
to do that today? No. Could it be ready to do that in a couple of months? Absolutely. And I think that one of the other very, very interesting tells that was kind of non-obvious if you weren't paying close attention, but during the call, they said in the month of April that they had produced 75% of what they had done in the prior quarter. So that call that around, $7.5 million. You multiply by 3 months, they should do well north of, in my opinion, $20 million in the second quarter. And then the other important point is that the CEO said that their high-speed sub-assembly station will be fully up and operational in the next 30 to 60 days. So the implications of that are that line one could produce $125 million in revenue per quarter. So they did 10 million, let's say they do 20, that gets them to approximately 30 million. They can do 125 per quarter. So let's say they could do, 50 in the next quarter, that gets them to 80. And then they could do, 80, 90 in the last quarter. And I expect, and again, this is just my opinion based on the backlog they have and the customer interest, that they could exit the year at a $500 million run rate. Now, one of the other positive overhangs sitting out there is, when are they going to actually announce that they placed an order for the second line? And they intimated on the call that their goal was to have that line up and running by the end of the year, which means that order needs to get placed pretty quickly. And then the other point that Nathan made, I thought was, you just got to take a second and just think about the words that were used.
Mhm.
Nathan also said that with the successful deployment of the Navy installation in San Diego, here's the quote: "We believe that with our American-made technology, we will be the preferred solution for the Department of Defense. So, you can go look at the number of military bases in the United States throughout the world. It's a huge number. So you look at the LDS TAM, it's projected to be $50 billion by like 2035. That doesn't include the data center component. I don't know how big that could be. It could be, a couple $1 billion. And then you look at the DoD component. So everything is lining up. And my hope, and again, hope is not an investment strategy, but my hope, and I think there's a greater than 0% chance that this stock could be a 10 bagger, and you'd be looking at yourself saying, why the hell didn't I buy more at $6 or 6.30 or whatever. So I'm very, 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 very encouraged about where EOS sits, and it's not without risk, but this is how outsized gains occur. So that's kind of my the sum of my thinking about EOS Energy.
I got one thing I got wrong was I thought we'd hear more about, with the tariffs in China about interest. I didn't hear this. I was really expecting to hear that they've had explosive interest, for just their battery storage product. Listening to what you were mapping out, it would make, from a stock performance standpoint, if they're able to convert and I agree with you, obviously, doing business with the private sector is so much more efficient typically than, municipalities and whatnot. So it's like there's this dam of potential that's holding all this dam that's holding all this potential back, and it's going to take. They've got multiple ways that they can accomplish their goals in terms of possible future explosive revenue. Um, and I think right now the only thing that I was watching the stock on Friday with the members on a 1 minute chart, and I was pointing out each time whoever it is was coming in and trying to pulse the stock higher, they were successful, and it was costing them about 600 grand, right? So there is, in my opinion, there is a party right now that is intraday coming in and supporting the stock. But for now, I think lack of we may get a sideways drift here. You know, I don't think we're going to go below, that 589, 581.6 level, which was Friday's low. And I'm looking to add more, Greg. I think you're right. I think it's easy to get myopic and look at the share price and go, well, shit, I don't want to pay $6.29. I could have paid, 540 less than a week ago. Yeah, you could have, but you didn't. So you could also be a week from now, and I don't know, I'm not predicting this, but a week from now, the stock could be at 720. Because I will tell you, I've noticed when buying comes in, the stock is not dropping, or has not been struggling, because there's been selling. It's when buying stops. I mean, I watch this, I will watch this thing on the 1 minute. I can tell. And so I think any hint of good news, any whisper of good news, um, the stock goes up. So yeah, I absolutely agree with you. This is, as you and I talked about months ago, this is a possible unicorn. A lot of things have to happen, but my gosh, the ingredients are there. Compare this to let's compare this to, well, if you don't mind, let's compare this to um, another situation we have, which is ENVX. Well, I mean, this is similar. They have this exciting technology. They have a huge TAM, and it's so frustrating for me right now because I look at this the stock chart price. I'm like, being the technical guy, I'd like to get long, and after probably by the time this gets aired on Tuesday, I will be long on a swing trade. But man, I'm so frustrated. I can't believe the management still. And that was my frustration. I thought Raj looked nervous. I didn't think he looked thrilled. Reading body language, I didn't hear anything new out of the call that would cause me to believe anything other than a shorter term swing trade that I'd be interested in a long position. I know fully well, Greg, that I could wake up tomorrow and they can announce a contract with Samsung. I just look at recent history. I'm like, I doubt it. I doubt it, but I don't know.
I think the odds are very low. I mean, look, some people may view me as being unfairly negative with ENVX, but you need to have some context in terms of at least how I think about this stock. This is a stock that when I first got involved, and I don't have any position, nor have I since the CEO filed his 10b5 a couple quarters ago. But I look at ENVX going back to the 2001 timeframe when they talked about a 30% density advantage, and they talked about 80 OEMs and billions of dollars in the funnel. And if I think about the call, the only positive thing that came out of the call, in my opinion, is that the CEO hasn't puked out more shares, right? So if you think about Enovix, the CEO recently sold 300,000 shares at 9 and change. In my opinion, and people may disagree with me, they've squandered their competitive advantage due to delay after delay after delay. They were supposed to be ramping in 2020. Now, in my opinion, I think maybe they ramp in 2026. I continue to believe that there are issues in being able to scale production. I'll talk about that in a couple minutes. But you just don't get a sense that this is a product with insatiable demand, which is a term that they used to use. Because if the product was that good, customers would be lining up and pressuring them to get them samples, accelerate quals, commence production. But instead, they bought a legacy jelly roll battery
Yeah,
factory in
yeah.
in Korea. Like if
Yeah,
the
comment on that
architecture
for me,
was
Greg.
that novel.
I didn't understand
Say
that.
again?
Sorry for interrupting. Please add some color. As I sat there and I thought, wait, were we switching now again? What our end product, or are we a major part of our revenue stream? So I would love to hear your comments, sir.
Oh man, I mean, again, I'm obviously, I can only look at things through the lens of my experience. But
Mhm.
if the architecture was that novel and demand was insatiable, they would be talking about and preparing to drop in a second line, but they're not doing that. That they avoid that conversation, and instead they bought a Korean jelly roll battery factory, which just strikes me as I'm trying to think of analogies that aren't crude, but it's kind of like you get all dressed. I don't know how many people are skiers, but you go to the ski resort and you see people in their Bogner. I don't even know if Bogner's still a popular brand, but they're all spruced up with their brand new
Mhm.
skis and boots and outfit and goggles. And you think, man, this person must be an expert skier. And then you see them out on the slopes and they're snow plowing. I mean, this just strikes me as a significant strategy change that was massively underplayed. Look, it's going to take capital to get that mothballed factory up and running. It seems to be orthogonal to their core strategy. And if the core strategy was resonating and gaining traction, they'd be talking about their second line, or where they were going to stand up their second factory, not buying some mothballed factory in Korea. And they talk about demand from the defense industry in Korea. Well, Korea doesn't have a particularly big army, and I don't know how many batteries Korea buys, but we don't hear anything about the conformal soldier product, where they provided some prototypes a couple years ago, and soldiers were supposed to wear these because they didn't catch on fire because of brake flow. Well, now we hear nothing about brake flow. We hear nothing about the Army contract. And they allude to this Korean military opportunity that I just don't think is that big. So the smartphone opportunity is a big question mark. Obviously it's a big TAM, but are Chinese companies really going to buy batteries from a U.S. Manufacturer in this complex and contentious trade environment? I don't know. They talk about how excited they are about their XR batteries. Those are the jelly rolls. Well, if that's the core of your strategy going forward, that's a low gross margin market. They talk about, EVs, and what they said specifically that got my attention, and I printed it out because I'm going to spend a couple minutes on their shareholder letter. But they said, where is it? Oh, they said that they've shipped. They talked about having 2 EV contracts that appear to be limited to providing a prototype battery, and they say that they've done that. And then they said that they're hoping that one of them, not both, one will put in place a commercial agreement. Now, what is that for? Is that going to market, or is that for, gee, you provided one and now I'd like you to provide us with 10? So, I just don't see the EV play being significant. I think that ENVX fits well in the AR VR market, because the smaller the battery, the better the energy density that they seem to have. But that's a small market. It's a very small market. And there was a slide I tweeted about this. There was a slide that really caught my attention, and it was the slide titled "ENVX offers multi-generational jump in battery performance." Well, they updated it with leading 2024 smartphone batteries. Well, we're in April of 2025, but they use 2024 batteries. The EX1M used to have, I want to say, yeah, it was a year ago, in their investor deck, they talked about an 18% energy density advantage. Well, with the 2024 phones, they took it down to 9%. And they talked about the EX2 having a 30% advantage. Well, now they took it down to 22%. So the question that I ask myself is, if you only have a 9% advantage, assuming that you can manufacture them, are you going to be able to command the kind of pricing premiums that they once talked about? I don't see it, but maybe they can. I excuse me, I highly doubt it. And then the other thing that I think is important to mention, and I tweeted about this, and some of the ENVX Twitter experts poo-pooed it, is they talk about having 250 million in cash. Well, you need to subtract out of that the 150 million in notes payable in 2028, because they got to pay that back. And they're burning at around 25 to 35 million a quarter. So, at this time next year, they could be in a position where they basically don't have any unrestricted cash. And that 25 to 30 million per quarter burn doesn't include capital requirements to unmothball that mothballed factory that they recently bought. So, I just don't see it, and it's very disappointing. And I think it's it's kind of what you get when a company fails to execute, and this is a company that's failed to execute. Now, I want to spend a couple minutes talking about their written comments in the investor letter. So under smartphones, it says, began development of cells with the exact dimensions of the planned commercial product this year. First qualification deliveries are scheduled in Q2. So in the past, the CEO has said it takes 9 to 12 months to qualify a battery. So if they're not shipping batteries until Q2 for the first qualification deliveries, that tells me that the earliest that they could be ramping would be not in Q4, but late Q4, and most likely 2026, assuming that the demand's there. The other one that really caught my attention was their comment about manufacturing readiness. And I've talked to a few folks that have indicated that they think there are big issues with Zone 1, which is the laser station, and that what they're finding is that as you increase energy density, the tolerances of that station may not, in fact, have been spec'd tightly enough. Because apparently, as you increase energy density, the tolerances get much, much tighter, and that this could be a significant non-trivial issue. And the reason I think it's a non-trivial issue is if you read the wording around manufacturing readiness, they say Fab 2 in Malaysia achieved ISO 9001, 2015 certification with zero major or minor findings. Additionally, we concluded the first customer audits of both Fab 2 in Malaysia and the South Korean facility. So they don't talk about, and they refuse to directly answer the question of whether they're achieving their 1,350 units per hour target, but rather they talked about ISO 9000 certification. So anybody that knows anything about ISO 9000 certification is all that has to do with is documenting your processes. It doesn't even look
Mhm.
at the specifics of the data in terms of the documentation. It's just a box checking exercise.
Mhm.
So I think that's kind of like, giving somebody the shirt sleeves off of your vest and avoiding the question about how they uh, can they produce at scale? And the last thing that is probably worth mentioning is in the case of, just use EOS as an example. When they talk about MOUs, these aren't joint development agreements. These are memorandums of understanding that, to me, based on my experience, imply that we'll agree on the high level terms of the deal, and then we'll turn it over to the lawyers to paper it in terms of a contract.
Mhm.
What the CEO of ENVX talks about is, oh, we've got this joint development agreement to provide him with samples. But he doesn't say the most important last words, which are, after the successful qualification of the samples, the customer has committed to placing a purchase order and going to market. So we may see a headline that says, oh, qualification completed with joint development agreement customer 1 or 2, and the stock may rally on that. But unless there are follow-on orders, that there is absolutely no reason to believe that we're going to see a significant revenue ramp in 2026, assuming that they can even manufacture them at scale. So, as we've talked about in the past, and I have predicted, revenue numbers would have to come down in 2026, and we've seen them come down significantly. Many have come down to around $100 million in 2026. But I'm skeptical that they can even achieve that. If Rockwell does $30 to $40 million and they don't get any OEM orders, or they are in a small pilot program, it may be tough sledding to get even to $100 million. So, in my mind, I view Enovix as uninvestable, at least for me,
Mhm.
because there are too many things that need to click into place, and there's a history of sliding out production targets and moving the goalposts in a very seductive way. So, like, it took my breath away a year ago when Raj said on the call, "Oh, nobody wants the EX1, everybody wants the EX1M." Yet there was no availability date on that, and the stock like went up a buck. Well, now it's in the sixes because they're just out of position on product. So you're out of position on product. You don't know that you can manufacture it. You've got potentially disruptive trade issues that may make it difficult for you to sell to your top market, being Chinese smartphone customers. You've pivoted to a jelly roll production facility, which you poo-pooed as you're going to make it obsolete with your next generation architecture. So I just think you got to watch this and see if things click into place. And for me personally, I'd rather buy it at $15 than buy it here
Yeah.
with the risk of it, going to 2 or 3.
I really, agree with that last statement. I've been saying, hey, I have no problem buying it higher if that means they've proved out their entire business cycle, and which means they have landed a customer. And to add some comments to the whole issue of being cute with words, I coined that word salad, that they were doing. I mentioned to you, I found that was a post in some energy newsletter or whatever, and by who I think is um, TJ Roberts, Rogers. He writes under a pseudonym of TJ Roberts, I think. And I challenged him. I said, why would you? The article wrote, that they had done a contract with the DoD, and I said, why would you write something like that? It wasn't a contract. You weren't even the lead. And you never, it's not an order if it's not you release no detail on size. And we haven't heard anything about it since. And it's that type of, I guess, lack of transparency that makes me angry that I sit and watch this company beyond everything else, but the hiccups and the delays and the selling of the stock after I'm not going to sell the stock beyond all of that. And, it is, I can't trust the information. Right? And and when I have trusted information in the past, I've gotten burned. So
100%,
yeah,
100%. And I don't want to imply that management is being intentionally misleading. But what I will say unequivocally is I give management an F at bridging investors from quarter to quarter. So you'll make some hyperbolic statement in quarter X, and then in quarter Y, you don't even mention it again. And in quarter Z, it's like it never happened. And that's just not the way to keep investors on track. And I think there's a reason that the stock is, I guess, now seven and change on today's market move. But there's a reason that it's at $7 instead of $27, in my opinion. And this is I think it's a classic case of a company that never should have gone public. It went public with incredibly high expectations. They reiterated repeatedly those expectations, and they've failed to deliver. And for me, the last straw is when you're on an earnings call and you say you're excited 15 times, and the next day you file a 10b5 to sell 100% of your vested shares. That's just not a good look.
he was really excited though, I thought. Not just
Yeah,
excited, Greg. He
he
was
was really
really
excited. Uh, I'm just, excuse me. I'm just very disappointed, and we'll see what happens. And for people that are pissed off at me because they think I'm negative or shitting all over the stock, this isn't personal. They're just data points that go
yeah.
into a thesis. And if you get new data points and you're unable to change the thesis, are you investing, or are you a cheerleader? I mean, it's crazy. I mean, data has changed significantly, and my investment thesis has changed significantly, at least for me.
Well, and, the people, I'm just waiting for it because it's headline driven. Um, if ENVX, and they're really good at coding or being cute with their words to convey one thing but have a legal basis to be able to say that's not what we were conveying. So I have no idea if it's intentional or not, but I know what uh when I see that, I've seen it before and it hasn't led to good things. I have no idea if it's intentional, but when I'm waiting for the headline that pops the stock to like $9 and all these, people are like either shitting on you or shitting on me. And I'm going to remind them, hey, I know you're a long-term holder. So why didn't you sell this thing? Was it 18 less than a year ago? Why didn't you sell there?
Well,
Why didn't you lock in any gains? Why didn't you sell in a pop back up to 12 and a half back in October of last year? Why didn't you do that?
well, I did.
Yeah, right, right. That's my point. That's my point. So people are going to come and celebrate when this stock pops, if it pops, okay? And my response is going to be, you're still down 40%. You're still down 30%. But the bigger issue is you didn't lock in the gains and your risk. Time is risk. Time is risk. You've been at risk this entire time. And if you want to know what the market thinks about EOSE's position as of today, it's a lot worse than it was less than a year ago. Stock's been cut in half. So I agree. And listeners, when I say I'm going to do a swing trade, I'm talking about 2 months out. I'm talking about it's a technical trade to catch momentum. It's completely different than an EOSE trade where I have literally maintained exposure to that since, Mr. Reyes and I call, I think back in June or July, when we stated before we put out in the podcast, and we waited until after the podcast to go long. And so on EOSE, we're not giving recommendations. I'm just trying to point out that, Mr. Reyes and I, we're actually using real money, our money. And so when we look at these positions, we're not looking at it from, I think a lot of FinTwit people do, Greg, is, oh, I'm just going to spout off any opinion because they really don't have any skin in the game. They have no skin in the game. And
Well,
so,
it's so interesting that you mention that, because there's someone on Twitter, I think their handle's like Leon or something, and everything this person posts is good for ENVX. You know, uh, Apple qualifies TDK batteries, good for ENVX. KTEL announces a battery that can charge in 5 minutes, and
must be Novix.
uh, good for ENVX because their batteries don't get as hot. I mean, it at some point it just becomes ridiculous.
Right.
And like I said, I used to own a massive position. I had approximately 2 million shares. And between 18 and 14, I legged out of it. I took some off at 18 and some off at 17. I think I took half off by then, and wanted to wait on the earnings call. And then when Raj filed the 10b5, I just said, I'm tapping out. I'm not going to let the words deceive me from the reality of the
Mhm.
actions.
Right. Again,
Yeah.
because it's not the first time that they've done this, and so it's frustrating. It's very frustrating, because there was, and you start off by saying, they've squandered competitive their positioning from a competitive standpoint. Yeah, they absolutely have. It's not as if the battery sector stood still and said, we're just going to wait for see what Novix comes out with. um I mean, it's just, especially the Chinese market. So let me move on to PCT, if you don't mind, because I've got to be honest, this is one that you've been talking to me about. We've heard from listeners for maybe 9 months about PCT, and finally grasping their macro story. And I am looking to get long, but I wanted to get your comments since you're my quant when it comes to all things macro and financial. I thought, for me, my takeaway on PCT is that it's maybe in an earlier stage of EOSE by, I don't know, a couple quarters, maybe a year. And I'm talking purely from a stock acceptance or stock knowledge standpoint, where the market is aware of it. But what are your comments coming out of that call?
So I think that the call was terrific, but there is one elephant in the room, and I'll get to that at the end of my musing. So yeah, they talked about two additional fiber qualifications, which is an important market opportunity for them in terms of providing fiber grade polyethylene. They talked about successful trials in the dairy cup market. They talked about 30 customer application trials in various stages. And that they have 3 customers that went from trial to converting to purchase orders. They talked about PG&E moving forward aggressively in terms of quals. They talked about an $11 billion pipeline based on all the trials. And they've got 33 trials, and they've got 55 pending trials. And what I view as a pending trial is, you go to a customer and say, hey, we've got this product, it's novel. It basically gives you, the equivalent of virgin grade polyethylene. It just happens to be recycled. And the uniqueness of our process is we remove all the contaminants. And the customer says, yeah, I definitely want to trial that, but I can't do it for, 90 days or 180 days, but 55 pending trials. And they basically ran their factory at 87% capacity, and that they produce pellets every day of the month over the last quarter. So, those are all very, very positive, but they only did 1.6 million in shipments.
Mhm.
And, this is a company that uh, needs cash to scale. They raised 60 million in cash. I think they've got around 35 billion on the books. And then they talked about something that really was a mind blower for me, and I worked on this a little bit. But they there's a slide in there where they say successful Bruckner stretch tests with pure 5-choice resin from Ironton. So who is Bruckner and why is this important? Well, there's a segment of the plastic market that has to do with wrappers, like the CEO talked about wrappers for candy bars. But you can think about any number of consumer products where you've got, a plastic wrapper of some type. Well, that's a market that has a TAM of between 30 to 70 billion dollars. So it's a massive incremental TAM. So why is Bruckner important? Well, Bruckner has 90% market share in selling to customers the production equipment that allows them to make polyethylene thin film. And Bruckner was quoted in their earnings release, and this is from a Bruckner executive, and it says, "We have extensively studied recycled polypropylene over the past 5 years. And through the initial tests, PureCycle's Pure 5-choice resin has performed better than anything we've seen before. We believe this could be the breakthrough the industry needs to close the loop in BOPP film." So that has huge implications, right? So you look at this company and they solve a real problem. It's a massive market. They've got 33 trials, 55 pending trials. The factory is up and running. They've got the potential to massively expand their opportunity with this Bruckner relationship, because all Bruckner has to do is go to the customers and say, "Yeah, we've tested with Pure Cycle, it works, and it meets this set of requirements." Now, what's the fly in the ointment, so to speak? So they also have a slide that talks about Ironton being able to produce nameplate capacity of 107 million pounds of resin when they are sold out and running at full capacity. And that plant was commissioned in 2023, and they're starting to ramp. Well, if they sell the polypropylene for anywhere from $1 to $1.35, it kind of caps the revenue that can be generated out of this initial facility and this initial line. And then they talk about Gen 2 and Gen 1 and Gen 2. And Gen 1 is their Augusta facility, and they're talking about 130 million pounds per line. And that's terrific. And they've talked about being able to have 8 lines in that facility, and that they're planning to commission that in 2027. But what they have not given clear guidance on is what is their strategy to address their CapEx requirements. And in the past, and I did some digging, and I could be wrong, but what I was able to dig up is in the past they've talked about CapEx being 140 million for 3 lines, and they can have 8. So they've got a big capital issue in front of them that if they can solve it, this stock should be good to go. Now, what I don't know is how they're going to solve it, because they haven't disclosed how they're going to solve it. There have been, people that have talked about the possibility of them using municipal bonds, and that, local government is going to help them raise the money for the Gen 2 manufacturing facility. I think once that issue's off the table and we see these successful quals and they're successfully ramping, the stock could be good to go. But if the factory's not going to be set up until 2027, you got to get through. Now, they commissioned the Ironton factory in 2023. Well, now we're in 2025 and it's starting to ramp. Is it going to take 2 years with the Gen 1 factory? I don't know. I think it will be significantly less than that based on the institutionalized learnings from the Ironton factory. But, it's not going to be stood up and running at full capacity in early 2027. It may take the whole year to get it up and running. So this is a company that could be revenue capped in 2026 and early 2027. And there's a capital overhang issue that, if they can use municipal bonds to fund it, that would be a terrific way. If they've got to do an equity raise or something that has hair on it, it could negatively impact the stock. But I love this story and the way that it's unfolding. And this capital overhang as it relates to the Augusta facility needs to get successfully resolved, in my opinion, before you can really plow in. And I've got a large position, but not as large as I'd like to see it be.
I think from what you're saying to me that overhang is going to be one of the reasons that perhaps a stock is going to have difficulty breaking out in this range. From my perspective, not from yours. And
No. That is kind of the conclusion that I've
okay.
I've come to.
I
But
don't
I
want to put
think,
words in your mouth.
yeah, no, I appreciate that. I think once that issue gets resolved, and like, let me give you a really exciting bull case scenario.
Mhm.
Ironton is sold out. They've got incredible customer demand from all of these successful qualifications. They're able to come up with municipal bond funding sooner rather than later. And they're able to stand that factory up at the beginning of 2027 or late 2026. This stock could be a monster. On the same token, if they're not able to resolve that sooner rather than later, or they're not able to say that they're able to commence production in early 2027, let's say hypothetically they say late 2027, the stock could be capped. But there is a very exciting scenario and a not so exciting scenario based on how they solve that capital requirements issue and when they solve it.
Well, and looking at the stock, my full disclosure, I don't have a position. I have been trying to get long the stock, but price wise, I'm looking at the 200-day moving average being at $9. I'm looking for at least 852 to 9, where I'd be interested in going long for a much larger outsized move up to 1150, perhaps a new 52-week high, I think. And so, listeners, one of the things I love about my co-host's analysis is he's able to give me so much information, obviously from his expertise, his personal experience, and then it's sort of, for me, what I use that analysis for, a macro analysis is, and fundamental analysis is, it's green light for me to establish a longer term position, and then I can trade around that core position, and that's what I do. That's what I've done with EOSE. I attempted that with ENVX, but then they kept screwing me on it. So PCT is one of those that I'm talking about. I want to establish an opening position, and I'll just trade around it as it goes up and down. I have no problem shorting it. And in fact, interestingly, Greg, jumping back to EOSC, within 2 days of EOSC moving, I was ready to go short. It's so interesting how the price charts work, because obviously that move canceled any thought of going short. But so with PCT, I'm going to look at, personally, I've been trying to get in this thing for over 3 weeks, and when I say I've been trying to get into it, listeners, it means I need a technical reason to get into it. I'm a different type of trader than Greg is, and so I need a technical reason that I look for specifically. Once I get that, then I'll start establishing position size. But from a technical standpoint, Greg, would you agree, from a technology standpoint or from a product standpoint, that this is another case of, if they can just get some traction and exposure, that would go a long way to perhaps being able to raise money at a much higher price? Or and I don't know anything what the status of municipal bond markets are right now. So but would that be the layman's version of what you've said, that they're close, but
Yeah, that's exactly what I was intimating, right? So if you compare Pure Cycle to EOS, big TAM, novel technology, EOS checks the capital box, Pure Cycle has a question from a regulatory standpoint or government policy standpoint. EOS has a tailwind, and as it relates to Pure Cycle, it's kind of, there's no positive or negative from a regulatory standpoint, other than in Europe where they're mandating a particular percentage of recycled polypropylene. So I just think PCT it's on track and it's a little bit early. And if they sell out Ironton and they've got this incredible customer demand from the qualifications, and they can come up with an optimal financing strategy, this stock, it could be a unicorn in my opinion, because it solves a real problem. It's novel technology, and there really is no alternative viable competition that at least I'm aware of to be able to provide, virgin grade polypropylene from recycled plastics, because of their novel technology that allows them to remove impurities from recycled plastic.
What we were going to discuss today, Mr. Reyes, we've saved the best for last, haven't we? We've saved BYON, and I'd like to. You had intimated on Twitter, and without obviously going into details or opening yourself up to anything else, that you had a substantial win. You want to add some color there? By the way, BYON is hilarious to me. That the reason why it's going up is on this tokenization scheme, and it's funny to me because if I ask somebody, and I tried this with a DM conversation, I asked somebody to explain to me how shareholders are going to achieve any benefit from revenue sharing or tokenization, anything as a result of this structure. And so far, nobody's been able to do it. So I don't understand it.
I think it's a gimmick.
Okay, thank you. I think it's a gimmick. But yeah, where are we at with the great? Oh, by the way, Mr. Lemonis, he put out there. You probably saw, I guess one night he was feeling his oats, so he decided he'd jump into a chat with me publicly and say, "Oh, fine, we'll have a discussion publicly." Of course, he never said a date. Now he's gone radio silent. For the love of God, I hope his board or his legal said to him, "Shut up," because there were many, many posts that I sat and watched and thought, why the hell would your legal department allow you to say this? It doesn't. I would love to have a conversation with him. I don't think he has the stones to come on. That's my personal opinion. And he was going to come on and answer really one simple question. I publicly said, Greg, my opinion that he's a terrible CEO, and my proof was the destruction of value that is occurring in BYON and is occurring in Camping World. But I was just going to focus on BYON. And he agreed to come on and talk about that and defend himself, which I was happy to do. I keep it cordial. But having said all of that, I would love to hear your view right now at this stage with the tokenization. And, the stock has moved up off its lows. Okay. But from a company standpoint, has your opinion changed much, Mr. Reyes?
I want to talk for a second about this legal insanity that I've been subjected to and my family has. So, the number one cheerleader for the stock is a guy named Mark Cahotas. I thought we were good friends. And in July of last year, I criticized Lemonis after he abandoned his $2 billion guidance for 2024 and $3 billion for 2025. And Cahotas came after me. He came after my wife. He spent the better part of a weekend denigrating, slandering me, defaming me on Twitter, calling me mentally ill, saying I'm on Ozempic and booze. And then he hits me with a cease and desist email, which is insane because the email basically accused me of doing what he and his girlfriend were doing on social media. I blocked him, and then I addressed some of the allegations, and then the guy hits me with a temporary restraining order. So I've had a latex ball in my mouth for the last 9 months. But this was an effort to try to destroy me. Think about this. He tried to get a permanent restraining order against me so that I would basically be dominated in my town. If I was at a restaurant and he showed up, I'd have to leave. If I interacted with him, he could have me arrested. If I said anything about him publicly, he could have me arrested. And had he won, I would have lost my Second Amendment rights and had to have lived my life with the sword of Damocles over my head. Well, needless to say, I won. And I won because his case was based on lies. And the pathetic behavior and lies on the witness stand were something to behold, with made up stories and crazy making. So what I think is just absolutely unconscionable is an attempt was made to attack me and destroy me because I, in a principled way, criticized the performance of a public company CEO, and he didn't like that. And he didn't like my behavior. Well, my answer to that is go fuck yourself, because I'm entitled to my opinion, and I've got experience running significant companies. And if you want to come at me and have a debate, I'm happy to have a debate, and we can hash it out or agree to disagree. But to attack my wife and to try to knock me out of the box is nuts. And what's even crazier is the way that Lamonis, got involved. And you made a comment about some of his tweets. This guy supposedly is the CEO of Camping World and the executive chairman of BYON, and he's responding to people's tweets on Twitter.
He's responding
Like,
to a
don't you have
complete
something
nobody.
better to do?
Yeah, he's responding
Yes.
to a complete nobody on Twitter. I don't have a lot of followers. That's the other funny thing. Here's the other funny thing, Greg. Since we're good friends, I found out through private text from you that, hey, things went well without any details, right? Things went well. He literally started talking to me 20 minutes later. That's when he went on Twitter. Lamona said, okay, sort of challenged me, right? And I'm sitting there afterwards thinking, well, that's interesting timing, because I wasn't aware fully of the connection. But I sit there and I think all of this is over something that actually is factually true if you look at the stock price. Because I don't care, at the end of the day, if you're at a football game, okay, nobody cares, that your defense played really well or your offense if you lose the game. It's the end of the game, the score that matters. And when you are the CEO of a company, you can say whatever you want to say, okay? But your share price, that's the score. That's what the sum of the opinion of the investment world thinks about your performance. And that's
Well,
it.
so let me tell you why I think the guy
Sure.
reached out to you is, Cahota sat on the stand and he talked about how he was afraid for his life, like this Twitter tough guy with baseball bats and axes and putting people in coffins, was on the witness stand in a court of law saying how afraid he is, which is total bullshit. What I think this was really about was silencing me so that I could not criticize his horrific investment advice as it relates to this company. This is a guy who's talking about, oh, Marcus and I are going to mop the floors with everybody, and when this stock is at 100, and don't bet against Marcus Lemonis. Well, he wanted to silence me. That's all this was about, and it failed. And I think it was an attempt for Lemonis to get in front of that. But getting into BYON, here's what I think is so interesting. This token gimmick is just stupid, in my opinion. I mean, you're basically penalizing existing BYON shareholders
Right.
by supposedly putting IP of overstock in a token. Well, what IP do they have? Like, seriously? They've got some valuable intellectual property? That's just complete nonsense. And if you stack the company up against my success filter, that basically I use to frame the discussion that we just had about EOS and ENVX and Pure Cycle. Let's just go through it as it relates to BYON. Large and growing TAM. Well, it is a large TAM. It just so happens that there's an entrenched dominant competitor called Amazon and another entrenched dominant competitor called Wayfair in the furniture space that basically take all the oxygen out of the room. In terms of unique differentiation or defensible technology, they have none. You've got Lemonis bloviating about, oh, now we've pruned the product portfolio from money losing products, and I've told the team that we're only going to invest in things where they've said this is how big the return on investment will be, and this is the opportunity and the time frame for the return on investment. Like you want to do a victory lap on that shit? Like, that's what you do as a CEO. But like pretending that there's something novel here. It's kind of like Johnny dressed up in a football outfit, and his parents are telling him that he's ready to go to the NFL. That they have no unique and defensible technology. They don't address any critical customer pain point, in my opinion. Their websites are discombobulated, and there's lots of talk about cross-selling and affinity marketing. I haven't seen any of it. Management team, I give them an F. They just suck. I mean, it's taken a year to get to this point, and what have they done in a year? Well, we basically have seen sales completely collapse. We've seen those sales collapse from 1.2 billion in 2023, and here we are. They just did 260 million dollars, so they're going to be down approximately 20% year over year. We've seen cash go. When that guy showed up, cash was at 300 million. Now they're at 114 million. They burned through more than two-thirds of their cash position. And
Yeah, but
and
Marcus is not getting paid a lot, Greg.
but that's another lie. He just got 500,000 RSUs. Part of the bull case, and one of the times that Cahotas came at me and was screaming at me on the phone was that I don't fucking understand because he's working for free and they've got 300 million in cash. Well, guess what? He's not working for free, and he's burned through $200 million, and he's running the company into the ground. So I'm entitled to my own opinion and and sharing my own analysis with people, but you want to make it personal, attack me and my family. Well, it's kind of become a little bit personal for me here, because this thing is a dumpster fire in motion. And what's so crazy, I like to think about, or I often use analogies, and I'll try to help people visualize something. But visualize this. He's talking about their strategic partner Kirkland that they've done a $25 million loan to. Well, that company only has a $26 billion market cap as we sit here today. It's just absolutely laughable. It's absolutely laughable. Now, when he says, oh, and in 60 days, we're going to go into revenue ramp phase. And, the way that we're going to do that is we're using KPIs, and we're, looking at, investments, based on their return. Like that's going to generate revenue for you? And
Well,
he said, it's crazy.
yeah, when they said that I don't know if they called it SKU management, whatever they called it, I sat there and said, "What the fuck?" Because that's what we're going to celebrate, doing the minimum job, which means you're going to make your system more efficient and get rid of all the SKUs that are low margin SKUs. Oh, well, I'm glad you got around to that.
It only took him a year.
That was my point. Like, really? This is business 101. You come in, you start, and you look at your sales. What are the best sales? What sells the most? What has the highest margins? What is the opposite of both of those? Hey, get rid of them. Fine,
No,
you
no,
didn't do it.
but
Why aren't you announcing it? That it's some like this is some big step forward. That's
no,
my
no,
point.
but think about this for a second, because I've done this. You sit the team down at a Monday morning staff meeting and say, by tomorrow, I want on my desk a rank ordering of all of our SKUs from most profitable to least profitable. And in 30 seconds, I could cut out the bottom third. Now we're a year later and we're doing a victory lap for that. Yeah, I just don't get it, and I certainly didn't deserve to be
No,
attacked or my
no.
family attacked because I was just pointing out the reality of the situation. Well,
Whether you're
I just hope he has the ability to move on. I've moved on, but you want to keep coming at me, you're going to be the guy not only with a permanent restraining order, but also with a defamation case, a multi-million-dollar defamation case. So it's just crazy. It's absolutely crazy. Let's assume that Lamonis was doing everything perfectly and at high speed, which he isn't. What are you left here with? It's kind of a backwater in eddy, retail e-commerce company in an environment where one could argue that you've got companies that are much more robust and powerful in the industry that are able to command eyeballs. that people go to instinctively when they want to purchase something. Yeah, this stock was once $100. Well, it was during COVID, and when people wanted to buy furniture for their homes because they were bored and wanted to spruce up their place. Well, COVID's over.
Yeah,
It's
and they also
over.
got
And
free money to do that. They paid
yeah,
in cash, so it was something they didn't.
exactly.
Right. Yeah. I look at Beyond, and I look at this tokenization, and I have to laugh because it was only about 60 days ago that I think it was our U.S. government and some of the big investment banking firms really started pushing that word tokenization as where we're headed. They're talking about that in terms of perhaps a U.S. digital coin exposure through tokenization. And there's but it's become a buzzword, is what I'm saying. And then magically, all of a sudden, Beyond is going to be in tokenization. And I just had to chuckle, and I look down the road and I think, well, whatever the next big thing is, I expect them to be in the quant computers a couple years down the road. See,
Well, I think the tokenization thing has a nuance to it that many people aren't aware of. To my knowledge, because he told me, Cohodes has a personal investment in T Zero, and he owns a bunch of T Zero tokens. And you juxtapose that on Lamonis a year ago, running around telling people that he thought that T Zero had virtually no value. Now it's kind of the cornerstone of their strategy. I wonder if he got talked into that by somebody. And at
mm,
the end of the day, you get this token. Like what are you getting? Like overstock intellectual property. At one point on his webcast that he took down, he said that they were going to do revenue sharing. Well, I haven't heard any more about that, but I think it's just a half-baked gimmick to try to give something to the marketplace. But it
yes,
really, really, he raised like $250,000 with tokens, and then he bloviates about, oh, that's because we capped the number of tokens that could be purchased. And it's like, really? I mean, seriously, what's the point of owning this token?
the shareholders know, I think, intelligent ones, they're getting screwed with this. This is not a real business model. This is not, this is again a transformation from what he originally set out to do. And so looking at it and then looking forward with Beyond, and I've made this comment before and I stand by it. Look, Beyond, unless there's not another round of stimulus, okay, which will increase all retailers' revenues, uh, Beyond $2, maybe less by the end of this year. I said it's going to be the easiest short. I'm happy it's going up. I'm going to short it. I'm going to
Well,
short the stock.
you were mocked about
Yeah,
your
I know.
$2 comment, but
Yeah, I know.
at the rate these guys are burning cash, and to the extent that his supposed pivot to revenue growth mode, whatever the hell that means, doesn't happen, I think $2 could be high. But again, like why would you want to be involved in this thing? I mean, it's got so much hair on it, and Lamonis is walking around with a load in his pants, and he's the only guy that can't smell it, in my opinion. I mean, it's just crazy town. It's
Well,
crazy town. So
let's put it in perspective. I'm mocked, and the stock, arguably, okay, 1231 close. The close was 493. Where are we now? 485. Okay, so here's just a couple ways I look at that. You can look at that straight line across and say, okay, so you haven't been right. I'm like, okay, yet. However, the stock hit a high over $10. Okay, I look at that and I'm saying, all right, if things are so good, why are you still 50% off the highs that were literally set, 3 months ago, 2 months ago? If
well,
things are so good.
because in my opinion, it was a pump. Lamonis was actually out tweeting about it, as well as his number one cheerleader, implying that there was some big news and some big event, and I'm working on something huge, and comes out and the stock rallies to 10, and then it proceeds to fall like a brick
Oh
to
yeah, yeah, you're
three
right.
and
That was the other
change.
thing. Lemonis wanted to come on because I did publicly state. I said I asked him. I said, when is the next pump? Before or after earnings? Are you going to drop a news release? And somebody had said to me, "Are you accusing of manipulation?" I said, "No, I'm just wondering when and if he's going to do another news release or schedule some other fireside chat conference prior to earnings release. Until I see a change of behavior in the stock, then I can only go off of recent history. And recent history tells me that the stock gets pumped and then sold into. Period. I can't go by anything else because there's nothing materially changed about the outlook of the company. So therefore, when I look at the price history, when this thing gets pumped, it gets sold off almost immediately. And it's drastic. So when I look at like people celebrate now, oh, well, I'm up from the highs in the last 3 days from 373 to 487. I'm looking at it, that's a gift. That is a gift. What's changed?
So think about it this way. My
Mhm,
hat size is 7 5/8. This
mhm.
stock isn't even a hat size. And if you think about the pumping, the pumping started when Lamonis became executive chairman. And there was discussion about $2 billion in 2024 and $3 billion in 2025, and influencers and cornhole leagues and this and that and the other, went up to 37 in March of last year. And then the day after the quarter ended on April 1st, it proceeded to collapse. And then he abandoned guidance. So in my mind, whether you call it a pump or bad guidance or whatever, the fact is the stock rallied, in my opinion, significantly based on a set of expectations that turned out to be false. Were they intentionally false? I don't know. But what I do know is that not only did the guy not revise them, he completely abandoned them. There are no influencers. There's no 2 billion in revenue going to 3. Now it's kind of, gosh, if we can do, 250 million a quarter, we can break even. Well, when is that going to happen? They just did, 200 and 30 million or something like that. Like they're not even close to break even yet. So, and so that was one pump. And I'm not suggesting that people did anything illegal or intentional, but stock pumped on that and went higher on that. And then there was this whole thing around something big's happening and stay tuned, and there's going to be this tokenization and blah 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 blah. And thing went up to $10 and then it proceeded to collapse. So people can do victory laps, because the stock is up today
31 cents to
31 cents. They
247.
can do a victory
Yeah.
lap because it's up almost 5%. But like really, like people didn't say shit when the thing collapsed from 37 to 15 when we first started talking about it, down to 3. And there's a reason for that. The MO is invent a theory out of whole cloth, reorder the facts to support it, start promoting it, the stock goes up, get out, and then go quiet until the rinse and repeat. But this is crazy. I don't want anything to do with this company. I don't want anything to do with the people involved.
Well, I don't know of a better way to end than that. Um, any closing comments? I want to, listeners, look, as Greg just shared, your opinion is your opinion. This is our opinion, each of our opinion. Okay. Don't take it personally. It's not personal. And if it is personal, then there's probably, I would bet you're over position sized or deeply underwater. You don't have to be. Um, neither Greg or I take any comfort or joy when people lose money. Absolutely not. And I think that's been evident in our history where we are pointing out risks, our opinion of risks in particular companies. More often than not, we've been right. And the stock has reflected that. But it's really, you have to take your own perspective and you have to do your own analysis. And for the love of God, if you don't agree with something, don't take it personally. Don't be a dick about it. I just don't get that. And here you are listening to a professional, I mean, a successful former CEO and an investor, successful investor, who's offering his opinion. Just went through a legal challenge. Enough. Okay, we don't need to be doing that. So I wanted to thank you, Mr. Reyes, for adding color to that, and I hope it is done. I hope all of that is done. And why don't you take us home today?
Again, thanks for having me. And I hope that I added some value in terms of just sharing my thought process and analysis, and people got benefit out of our dialogue and discussion. And like you said, if it's okay to agree to disagree, but the minute you start attacking people and their families and suing them, that's kind of crossing a bright line, in my opinion. And the ad hominem attack is really the last bastion of the intellectually lazy or the stupid. And I'll leave it at that because I'm neither of those things. So have an awesome week, and wish you a happy Father's Day in advance. And let's circle the wagons and talk again when we got something to talk about.
That sounds awesome, Greg. Thank you, sir.
Sales of the next man. Passport in my left hand. Thinking that you are next. Heck, oh, you ain't holding your breath, man. Cause I'm out here, I'm hungry. I don't play around, trust me. Ain't had as much drive since my Honda Civic got rusty. And my girl said she loved me.